What's going on, guys? Russo Trades here. Just wanted to go over important liquidity levels, so I'm gonna jump straight into it. The first one will be session liquidity. So session liquidity will be if you're trading New York session like I try to, London high and London low will be most important. If you're trading London session, Asia high and Asia low will be most important. As you can see, during London session, when we sweep Asia low, we got a bounce. During New York session, when we sweep Asia high, we got a bounce or we got a dump there. And then when we sweep Asia low, we get a long after that. So session liquidity is very important. Um, Midnight opening price is definitely very important. 8:30 open price is very important. So those are your most important session liquidity levels. New day opening gap is important and new week opening gap is important. I'm not going to get too deep into this stuff, but if you have any issues with the terms I'm saying, then definitely do a little bit of research on new day opening gap, new week opening gap, and all this stuff right here. So after session liquidity, actually, let me backtrack there. Session liquidity is important, and all these levels are important because we're normally looking for reversals off of most of these levels. So whenever we take liquidity like London High, we're going to look for a reversal. And when we take, let's just say we fill this new week opening gap, we obviously got a bounce play after we filled it. Um, Now we'll get into daily and weekly liquidity. So the previous daily high and the previous daily low are very important as well. Once we take those out, we normally look for a reversal off of there. So previous daily high, previous daily low, and there's an indicator for all these. I use this indicator for daily high and low and weekly high and low. And then this one is by trade for op, ICT kill zones and pivots. This session liquidity indicator really helps a lot because now I don't have to mark these levels up. Midnight opening price is definitely very important. Actually, you can see today we got a 2022 model off of it, off of this fair value gap and off of midnight opening price, and we dumped straight down to 9:30 a.m. wick, which I'm gonna get into that as well. So after session liquidity and daily and weekly liquidity, another good liquidity pool will be the 9:30 a.m. wick. I mean, today it wasn't really that good, but the 9:30 a.m. wick will be another good liquidity pool. Also, data highs and data lows. Daji teaches this a lot. So let's say last Friday, we didn't really have a data high, but this was the 8:30 a.m. news. And here's the wick on the news. We actually had a bunch of liquidity here, so you could have taken a short setup down to that. It wasn't the greatest risk to reward, but you could have got more than 10 points off of this. So data highs and data lows, these are definitely going to be draws in the market. And when I say liquidity, it just means the market is very likely to go to these areas in the market and it gravitates towards them to take them out. And the next one will be equal highs and equal lows. So actually right now we're in Asia session, but I think these equal lows are the next draw. So there's equal lows here. We have a lot of momentum down. If you end up getting, let's say, a 2022 model or an inverse over here, it would be a good short if it wasn't Asian session. What else? So we went over session liquidity, daily liquidity, and now went over data highs, data lows, equal highs, midnight opening price, 8:30 opening price, daily levels. Other than that, I mean, the market's always drawing somewhere. If we're not taking out liquidity above old highs or above old lows, we're gonna be rebalancing fair value gaps. So let me just give you an example. When we were down here, I know we took out quite a bit of liquidity here. So here, that was that was the PM session low from last Friday. So we took out the PM session low, we took out London low, we took out Asia low, we filled this gap. So really you're looking for a reversal off here. And where's the most likely place for price to go? We draw our 50% on this swing, this impulse leg, and we know, okay, this fair value gap is in 50%. We're likely to draw here. So whenever you're in here, in this area in here, we know we can look for longs here because we took out liquidity and because now the draw would be this gap. And obviously we went and touched that gap. I think it gave quite a few entries here. I mean, there was quite a couple inversions. It wasn't late in the day, but it gave nice entries to it. So that's very important. This was the ultimate, like, if you wanted to catch almost the bottom, unless you traded this 2022 model, which was probably on the 5 minute or something. But we're always drawing to liquidity, and liquidity will be above old highs or above old lows or below old lows, and fair value gaps, which are imbalances in the market. Those are the only two things price is doing at all times. So definitely get familiar with the things that I keep saying over and over: session liquidity, daily, weekly liquidity, and also these opening prices and the opening gaps as well. Get very familiar with it. It works. That's why I use it. When you see how good this stuff works, you really start to think about, like, man, how I wish I found this sooner. So it's pretty cool stuff. Every time, look, London high, reversal, London low, reversal, Asia high, reversal, Asia low, reversal. Like, it just happens over and over. Here we used 830 open as a resistance again. And this isn't no support and resistance. That's not how we trade, but these are institutional support and resistance levels, I guess you could say. We took out London low. We got a nice little reversal there. Asia high ended up reversing. Asia low ended up reversing. Like, this stuff just happens over and over. If you go to the previous daily high and previous daily low, you'll see the same thing. Took the previous daily high, ended up framing a reversal up here. Also, very important to know, we always go from internal liquidity to external. So internal liquidity will be like a fair value gap like this. External liquidity will be a high or a low. So I'll give you a good example. I'll go straight to the 15-minute actually. So since we took out external here, this is external because this is a low. These are a bunch of lows over here. Took out external liquidity. Now, where's the market likely to draw to? Like I said, this would be internal. So we always move from external to internal. So we move from high or low to fair value gap, if there needs to be one balance. But that's literally how we move, and vice versa. Internal, now we're gonna go probably down to external, at least some form of external here, which would probably be the equal lows on the 5 minute there. Equal lows here. Unless I'm mistaken, maybe it's, yeah, those are the equal lows. So definitely see that getting taken, and definitely jump into ICT stuff. It's very good, and thank you for tuning in. I'll see you in the next one. God bless.